Hello guys, welcome to a new video regarding the market profile series. In this video we're going to be speaking on the importance of a top-down approach and watching the monthly, the weekly, and the dailies when it comes to planning out your trading day. Before we start, make sure to like, comment, subscribe, keep your notification bell on, and put in some comments how we're doing. Any requests as well. And we also look forward to seeing you guys in our Discord. So to get into the video, we'll show our daily volume profiles. You can see within the back sides of the TPOs. We also see the fact that we have our RTH and our ETH sessions shown. We want to have also the weekly volume profile, and you can see the lines kind of outline where it is. We have our highs and our lows. You can also note we have our monthly. We have our highs and our lows identified by this line that I have here. The solid line being our volume points of control for the weekly, and this one's for our monthly. You can use these as important levels. We have our monthly high, monthly low, weekly high. Coincidentally, our weekly low is also our monthly lows. We can also highlight important points of balance. So in this case, we have the weekly profile. The way I have it shaded is I can place my right around so. This is our volume, high balancing area. We can tell that day over day, this is a zone that has traded up the most, time and volume. And then as we can find with both the weekly and the monthly, we have this zone of prices as a low volume zone. Looking forward into a plan, we can also see we have this area below, and we have a tapering occurring down at these lows as well. That would be a quick way to draw up a chart based on the weeklies and monthlies, so that we note that were we to open up the next session and we break below this balancing area, we have an opportunity of testing through this low volume or testing through this low volume. If it's unable to go through and create a new balancing zone, we have the opportunity to also trade it back through this balancing and test the other side out. If we're successful, we can go towards previous areas of balance, which we can identify starting around here, ending about here or so. Let's say closer to the volume profile, volume point of control. So this becomes your kind of goal area. If we are to trade and unsuccessfully trade through down this way, we can imbalance the other way, back towards a previous set of balance. Because markets can only do a few things where it goes from a state of balance to a state of imbalance, back to a state of balance, or to a state of prices where there's a previous balance, because that becomes like a magnet of sorts. And the market does this over and over again. And these are the sort of things you want to look at when you come into the close of a session and you want to plan day trades for the next session. You might be wondering how this could help a scalper. If anything, it prepares you to start the day, depending on where we open, as to what side of the market you'd be more favorable leaning on. And it keeps you from fading moves that, as we leave the state of balance and start trending or imbalancing, it stops you from fading those over and over again, blowing up your stop outs and slowly burning out your account. I want to thank you for watching this short video regarding the top-down approach of monthly, weeklies, and dailies. And we hope to catch you on the next video as we start to close out our market profile series and look to start a new series of videos in the future. If you want to place in your comments to the direction of where our next series of videos should be headed, make sure to do so. Keep your notification bell on so that you're notified of any release of videos in the future, and we hope to see you again. Bye-bye.